All right, folks, Dave here, and today we're diving deep into a stock that's been making waves and perhaps some headaches for a lot of you, Robinhood, ticker HOOD. After some recent price action, many are wondering if the pain is over or if there's more downside to come. We've run the numbers, crunched the charts, and I'm ready to lay it all out for you. So, what's the buzz around HOOD right now? On one hand, the company's fundamentals are looking surprisingly strong. We're seeing chatter about impressive earning results with a whopping 45% year-over-year revenue increase and EPS that literally doubled. Gold subscriptions are soaring, interest-earning assets are booming, and management is talking about gaining market share and the strategic acquisition of Bitstamp. Sounds great, right? But here's the kicker. Despite all that good news, the stock's technicals are telling a different story, suggesting a near-term caution. It's in a downtrend and testing major support. It's a classic fundamental versus technical standoff. For those unfamiliar, Robinhood Markets Inc. is that financial services platform that's become synonymous with retail investing. They let you invest in stocks, ETFs, options, gold, and even cryptocurrencies, all from a user-friendly app. They've also been beefing up their educational content and cash management services. Looking forward, management is pretty optimistic, highlighting continued market share gains and successful product velocity with new offerings like futures, options, and prediction markets. This sets a high bar for our analysis, so let's see if the numbers back up the hype. Now, let's get into the nitty-gritty, our scenario analysis. We've got this interesting situation where Robinhood's official guidance and recent financial reports paint a very rosy picture of growth and strong performance. However, as I just mentioned, the market's technical narrative is screaming caution. We've had to reconcile this by acknowledging the strong underlying business but factoring in the immediate price action and market sentiment. This leads us to three distinct possibilities, each with its own probability. First up, our base case, which we're assigning a 45% probability. This scenario assumes Robinhood keeps its operational momentum going, building on that stellar Q2 2025 performance, 45% revenue growth, doubled EPS, and huge jumps in gold subscribers and interest-earning assets. Management's guidance about market share gains and new product success supports continued growth, even if it's a bit more moderated. The technicals show the stock in a downtrend and on major support at $127. If this support holds, the strong fundamentals suggest consolidation and a return to growth. For our valuation, we took the current last 12 months EPS of $1.97, projected next 12 months EPS with a 25% growth rate to get $2.46, and then applied a conservative PE multiple of 60x, giving us a fair value of $147.60. We give it 45% because while fundamentals are strong, the technical downtrend means some immediate uncertainty. Next, the bull case, coming in with a 30% probability. This one is all about Robinhood significantly over-delivering. Think accelerated adoption of those new products, successful international expansion, maybe leveraging Bitstamp even more, and a sustained strong bull market, especially in crypto. Q2 2025's doubled EPS gives us a strong foundation for this kind of acceleration. For this to happen technically, the stock needs to break out of its current downtrend and maintain above $142. Our valuation here starts with the $1.97 LTM EPS, projects a strong 40% NTM EPS growth to $2.758, and then applies a premium PE multiple of 75x, reflecting that high growth and leadership. This lands us at a fair value of $206.85. Why only 30%? While the fundamental potential is huge, the current technical downtrend and the need to overcome significant resistance at 142 keep the immediate probability lower. Finally, we have our bear case, assigned a 25% probability. Now, this might seem low given the bullish narrative, but the technicals are a serious factor here. This scenario anticipates major headwinds. Think increased regulatory scrutiny leading to fines or restrictions on key revenue streams like payment for order flow, a prolonged market downturn hitting retail trading, or fierce competition eroding market share. This would translate to a significant slowdown or even a decline in EPS. Fundamentally, we started with the 1.97 LTM EPS, projected a 10% decline in NTM EPS to 177, and applied a much lower PE multiple of 40x, reflecting declining growth and higher risk. This gives us a fair value of $70.80. Why 25% for the probability, especially when there's good news? Because the technical analysis strongly supports an elevated probability for this case. The stock has seen a major reversal candle a few days back, it's firmly in a downtrend, and it's currently perched precariously on that major support of 127. If that critical support breaks, the next support is 122, indicating further downside. The current price is alarmingly close to this major support, and its breakdown would confirm a bearish trajectory, hence the higher probability assigned due to technical weakness overriding some of the fundamental optimism. Alright, let's pull up the chart and see what the squiggly lines are telling us directly from our technical analysis. What we're seeing is that after a major reversal candle a few days back, the stock has been in a clear downtrend. It's currently sitting right on a major support level at $127. If this $127 support breaks, the next key support we're watching is at $122. On the upside, we've got resistance points at $126 and a more significant one at $142. To truly resume an uptrend, Hood really has to break out of this current downtrend pattern and maintain its price consistently above that $142 level. So, is Robinhood a buy? Based on our deep dive, my verdict is not yet definitively, but the underlying fundamentals are setting up a strong long-term case. The company is performing incredibly well fundamentally, showing robust growth and smart strategic moves. However, the technical picture is providing some serious near-term headwinds. The stock is in a downtrend, resting on critical support, and needs to prove it can break resistance. While the long-term prospects look good with a base case fair value of $147.60 and a bull case of $206.85, that bear case at $70.80 is a real possibility if the technical support fails. We're in a weighing game for the charts to catch up to the fundamentals. Given this analysis, if you're looking to start a position or add to one, I'd be watching closely. The current major support at 127 is key. If that breaks, 122 is the next level to consider. For a more aggressive entry with confirmation, waiting for a breakout above 142 would signal the start of an uptrend, aligning more with our base and bull case fair values of $147.60 and $206.85, respectively. But remember, always do your own research and manage your risk. That's it for our deep dive into Hood. If you found this analysis helpful, smash that like button, subscribe to the channel if you haven't already, and hit the notification bell so you don't miss our next episode. Let me know in the comments below, are you bullish or bearish on Robinhood, and what's your target price? This content is for informational and educational purposes only. It is not financial advice and should not be construed as such. Investing in the stock market involves substantial risk of loss. Always consult with a qualified financial professional before making any investment decisions.